Another major shift in the real estate market. September was a month of high activity in terms of real estate, causing many, many changes to all sectors of real estate. Today, I'd like to talk about the announcements that were made during the month of September that caused a major shift in the real estate market. My name is Nico James-Bock. I am a broker at the CondoWiz group at Royal LePage Signature in downtown Toronto. These are the 7 major changes or announcements in the Canadian and US real estate markets. Welcome to another episode. The first major announcement that came down the pike was the September 4th BOC rate reduction announcement, which was the third announcement of the new season with rate reductions. So this was the 0.25 announcement, which reduced the overnight lending rate to 4.25. Number 2, the inflation rate drops to 2%, which is exactly what the Bank of Canada was waiting for and was anticipating to happen during the 2024 year. So they've reached the target rate of inflation, and that was displayed during the August 2024 stats. Number 3, no new stress test when renewing your mortgage. This was recently announced, which is a welcome change for those who are looking to renew their financing. The fourth announcement was Ottawa, CMHC, announced raising the price cap for insured mortgages to 1.5 million, up from 1 million, thereby reducing the amount of the deposit, the down payment required for an insured mortgage. The fifth, Ottawa announces 30-year mortgages for certain people under certain circumstances. So the mortgage amortization jumps from 25 years to 30 years, again, certain individuals and under certain circumstances. The sixth announcement, unemployment is on the rise. So again, it's nearing 7%. Which is worrisome. It's another leading indicator that the Bank of Canada is watching very closely. And moving to the US federal interest rate experienced a first rate cut since 2020. So let's dive deeper into a few of these announcements and see what they mean moving forward in the world of real estate and what it means for you as a buyer, a seller, or just an individual looking to buy real estate or increase the value of the current real estate that you have. It also touches upon tenants. Some of these changes will affect as well those in the rental market. The first announcement that I want to just touch upon briefly is the Consumer Price Index. It rose 2% year over year in August, the slowest pace since February 2021, and down from a 2.5% gain in July 2024. So the core inflation measures averaged 2.35% year over year, and excluding mortgage interest, headline inflation was a mere 1.2%, well below the bank's target inflation level of 2%, which it just reached if you include shelter costs. So we are moving, inflation, that is moving in the right direction. It's moving in the direction that the Bank of Canada wants to see. So what does this mean? This opens the door for a possible acceleration in the Bank of Canada's easing policies. The next two announcements could see a 50 basis point rate cut at each announcement rather than the 25 basis point cut witnessed at each of the last three announcements. The next three dates, or the next two dates, are Wednesday, October 23rd, which happens to be my birthday, and Wednesday, December the 11th. That will be the final announcement for 2024. So we anticipate rate reductions. And again, we're looking at 50 basis points as opposed to 25 basis points. That is my prediction, as well as what the leading economists are saying. The CMHC increasing the cap to 1.5 million. This is kind of like a double-edged sword. To buy $1 million home in Canada, buyers must save up at least 20% of the home's purchase price. This comes to a minimum amount of $200,000. This is because the Canadian Housing Mortgage and Housing Corporation, CMHC, did not provide mortgage insurance for homes priced over $1 million. When a buyer buys a home with less than a 20% down payment, the mortgage is called a high ratio mortgage. In such cases, the lender buys mortgage insurance on the borrower's behalf from the CMHC, which transfers the risk of such mortgages to the CMHC. However, this option is available only for homes under 1 million. This all changes as a result of last week's announcement. New mortgage rules changed on September the 16th. The price cap for insured mortgages will be boosted for the first time since 2012, moving to 1.5 million from 1 million to allow more people to qualify for a mortgage with less than a 20% down payment. As I mentioned earlier, it is a double-edged sword. It kind of encourages people, buyers, to increase the ceiling for their purchase, even though the average price of a freehold property now is 1.2 million. So it's already over the 1 million mark. But increasing the ceiling, the cap for insured mortgages to 1.5 million would possibly push those beyond their limits. However, it does allow more people to qualify. New 30-year mortgages. This is a major announcement, also a double-edged sword. It depending on how you look at this announcement. Under the new rule, which comes into effect on December the 15th, 30-year amortization for insured mortgages applies to first-time home buyers on all types of property, so resale as well as new build or pre-construction. Also, all home buyers, not just first-time home buyers, but all home buyers on new build and pre-construction. So those are the categories. Those are the limitations or restrictions. The ability to make minimum down payments on housing up to Canadian 1.5 million opens up diverse housing options previously not available to many first-time home buyers. So this is in reference to the previous announcement. Having to put together a minimum down payment of 20% on a detached home, for example, was a financial hurdle too steep for many and relegated first-time buyers mainly to the condo market. So the combination of increasing the price cap to 1.5 million and increasing the amortization to 30 years opens the door to more buyers. So these measures will for sure entice those buyers that have been sitting on the fence to make a decision in the final quarter of 2024. So now is truly the ideal time for most people to buy, to get into the real estate market. With these changes, it makes things easier in a sense for many people to partake in what is happening in real estate. Another announcement. So no new stress test when renewing and changing lenders in Canada. The national banking regulator says it will no longer require borrowers with uninsured mortgages to undergo a stress test when switching providers. The Office of the Superintendent of Financial Institutions says it will end the policy for lenders to apply the minimum qualifying rate, which is often 2% above the prime lending rate, to straight switches when uninsured mortgages are renewed at a different institution under the borrower's current amortization schedule and loan amount. OFC says the change comes after feedback from the industry and Canadians about imbalances between insured and uninsured mortgages at the time of mortgage renewal. It also says data shows the risk the requirements had been intended for to address have not significantly materialized. The next major change that was brought about by the August stats is the Canadian unemployment rate reaches 6.6%, so almost 7%. Statistics Canada released August unemployment data a couple of weeks ago, showing continued growth in excess supply in labor market nationwide. Employment changed little last month, up 22,100. The employment rate, the proportion of the population aged 15 and older who are employed, decreased a tick to 60.8%, marking the fourth consecutive monthly decline and the 10th decline in the past 11 months. The Bank of Canada expressed mounting concern about the rising output gap, the difference between economic growth at full employment and the current unemployment growth of less than 2%. Just one moment. If we pass to what's happening in the US, the US federal interest rate reduction was announced. The Federal Reserve cut the target range for first time for the Fed rate by a jumbo 50 basis points, which is what we're expecting at the next announcement, to 4.75% in September 2024, the first reduction in borrowing costs since March 2020. While the decision to cut rates was anticipated, there was a speculation about whether the central bank would choose a more conservative 25 basis reduction instead. So what is happening in the US is similar to what is happening here. It's just that the US has taken a little bit longer to make their interest rate cuts, but that is starting now. We are well on our way to additional cuts. So just wrapping up, the federal government's decision to bump up the amortization period and mortgage insurance cap is a double-edged sword. There's a cost to a longer repayment horizon. However, buyers can also benefit for paying lower monthly costs. The main caveat is that the longer a mortgage time frame, the more that will have to be paid in interest over that period. The impact of the new policy will largely depend on each consumer's circumstances and needs. If the goal is to get the house that you want, it's positive. But if your goal is to pay the least amount of interest, then it's not. The BOC is keeping an eye on unemployment and will continue to aggressively cut interest rates in the coming months. Nothing we've seen so far will help ease our housing crisis. However, what we need to see more of in terms of federal, provincial, and municipal governments is help in lowering the barriers to building more homes. Make the time frame from start to finish shorter so developers can provide finished homes to consumers much faster. And as well, lower capital gains to investors can release so that they can release investment properties sooner. So we haven't seen any of these measures yet, but the announcements that we have seen will definitely stimulate the housing market. And we will see what effect that will have on prices. Prices have stayed relatively flat throughout the summer and coming into the fall. This, however, will change as the demand for housing, which really hasn't changed, is that the majority of buyers just haven't acted upon those urges, but now they will be encouraged to do so, and they will eat up a lot of the excess inventory that we're currently seeing, especially in the condo market. So this extra stimulus will most likely have a upward pressure effect on prices. So as I mentioned before, now is the ideal time for most buyers to get into the housing market, and to encourage renters as well to perhaps leave the rental trap and get into home ownership. There are several attractive incentives, and not the least of which obviously is lower interest rates and extended amortization period. You will have all of the stats in my various social channels, and you can reach me directly. All my contact information is in the notes. That's it for this episode of Brick by Brick, Building Wealth Through Real Estate. I will be in touch with the September stats within about a week. Ciao, ciao.